Hey everyone, Verizon reported fiscal 2023 first quarter earnings results. So I went through their figures trying to estimate if their dividend became safer or riskier because I'm sure some of you following the stock already know, but Verizon offers an incredibly robust dividend yield. As of this recording, Verizon offered investors a dividend yield of 6.75%. That's a really good dividend yield. And a lot of investors are attracted to Verizon stock, specifically for that dividend. So I went through these earnings results trying to answer that question. Did it become safer? Did it become riskier in terms of a dividend stock investment? So that's what I'll do in this video. So let's begin. So revenue decreased by 1.9% in Q1 to 32.9 billion. Earnings per share fell to $1.20. That was down 11% from the prior year. So not good news so far. The company lost 127,000 postpaid phone subscribers. That was really bad news, especially because AT&T reported a couple of days earlier and they added over 400,000 postpaid net subscribers. So it looks like AT&T took some of Verizon's phone subscribers. The good news is Verizon added 437,000 broadband net additions, and these customers are stickier than cell phone subscribers, right? Think about when you add a home broadband connection, you you likely had to have somebody come to your house for the install, or you had equipment sent to your house and set up, and the switch from broadband to another broadband company is more difficult. Also, you may not have very many broadband providers in your area, so Verizon might be your only option if you want broadband. Otherwise, you got to go with maybe a cable connection with someone else. So it's not as easy to switch as it is with a cell phone provider or a wireless provider where you've got T-Mobile and AT&T, and T, and then you've got all the smaller other providers that are affiliates of one of the big three typically. But it's easier to switch. Cash flow from operations jumped to 8.3 billion. This was up from 6.8 billion in the same quarter the prior year. So this is the time when Verizon is starting to harvest all the investments they made in the 5G network. That took billions of dollars of upfront investment, and they're not completely done with that rollout, but now it's starting to benefit from uh, selling those services that they invested in a couple of years ago. Long-term debt remains trouble, remains a risk at 141 billion. That was flat year over year. But this is for companies like Verizon and AT&T is similar. They've got nearly 100 over 100 billion dollars in debt also. But these companies that generate a lot of recurring revenue, a lot of recurring cash flow, billions of dollars of cash flow that comes in from their subscribers, both in broadband and wireless, they're capable of servicing this debt. So they've got a lot of cash flow that comes in that can pay for that debt. Still, it makes it risky that they've got all this debt, especially now that interest rates are higher. When it comes time to refinance tranches of this debt, parts of this debt, because it's not all one big loan for 141 billion. It's several bonds and loans and other things with different interest rates and different maturities. And so when those come due, they need to be refinanced, most likely, rather than paid off in full. And they're likely going to be refinanced at a higher rate now that interest rates are higher than they've been in a very long time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. ARPA of $130.06 increased 4% from last year. ARPA stands for average revenue per account. Average revenue per account of $130 was up 4% year over year. Most people, on average, have multiple accounts with Verizon. In fact, the connections per account increased to 2.79, up from 2.74 year over year. This is the area I've been looking for as the growth uh, driver for Verizon and AT&T and T and others, is the addition of connections to the accounts. Most people that want a wireless phone connection probably already have one. The growth here is in additional devices like smart watches and tablets, right? If Verizon, AT&T, and we're talking about Verizon here, so let me stick to Verizon. If Verizon can get incremental devices onto their accounts, that's going to boost revenue and that's going to boost profits. That's the area I'm looking at. And 2.79 up from 2.74, modest growth. I would like to see better growth in this metric going forward. So this is something I'm looking at, as well as the postpaid phone net losses in the quarter as two of the most significant items in the quarter's report. So overall, to answer the question, did Verizon's dividend become riskier or safer in this quarter? Overall, I would say the dividend became safer, namely due to the big jump in cash flow from operations. The $1.5 billion increase in year over year jump from cash flow from operations was the primary driver that led me to feel that this dividend is now just a bit safer than it was at the same time last year. All right, so that's all I've got for this video. Thank you so much for watching. And if you like this video, please go ahead and subscribe and support the channel. It'll really help me make more videos like this one. Thank you so much for watching.